Joining us for Minnesota Matters. My name is Tess Rice. I'm MBA's General Counsel. I've got Teresa Kubas, our Senior Government Relations Manager here, and then Tom Boswell-Healy, Associate Counsel and Compliance Consultant. Well, the legislature's in full swing, so we're going to kick it off to Teresa, give us an update on what's happening at the Capitol.
Perfect. Thank you, Tess. Good morning, everybody. Just kind of want to catch people up kind of where the legislature is at right now and kind of where we are going. So just a brief recap. I think the last time we met for Minnesota Matters was right after the elections. So just kind of look back at the elections. The Minnesota Senate was not up for re-election this year. However, there was that special election out in the Orono area. And so right going into the elections, it was 33-33. Democrats won that special election, so they went back to 34-33. So the Democrats have control of the Minnesota Senate. One thing that did happen before the end of the year was Senator Carrie Dietzig had passed away from cancer, and she represented Minneapolis, the University of Minnesota area. When she passed away, the governor called that special election, and that one occurred at the end of January, with Doran Clark winning that one. It was obviously a very DFL seat. So the Senate went back to 34-33. But for that first month, the Senate did get along quite well, and shared some chairs and shared the presidency. And so they worked really well for the first month of session, which began on January 14th. Looking at the Minnesota House, that was a very different outcome. Obviously, all 134 were up for re-election this year. We woke up that morning after the election, I think probably when we had Minnesota Matters last time, we were at a 67-67 tie. So there was a complete tie in that House. So then Speaker Hortman and Minority Leader at the time, Lisa Damuth, came together to work on a power sharing agreement. So most of November, they worked on a power sharing agreement, because the last time that there was a tie in the Minnesota House was in 1979, and that one didn't go so well. But Republicans had not had control of the House in a really long time. So they were just itching for some kind of power. And so they really kind of were taking whatever they could get back in 1979. So when they looked at this time around, it was, how do we work together, knowing that we're in a very different time than 1979? And Hortman and Damuth really came up with a power sharing agreement that they would somehow figure out how to work the sharing of the speakership, but then share the gavels for every committee. And every committee would have to have equal number of people on there, representing the fact that there was a tie in the House. So it was 67-67, so everything would need to be tied. Everything that came to the floor would have to have bipartisan votes. And any vote off of the House floor would need to have 68 votes, which is what's required regardless, because of 134 being the number that is a full House. So that was where we were at in November. A couple of things popped up. There was the recount in the Shakopee seat that kind of went back and forth with a case going before, and 20 missing ballots. That one ended up getting resolved the first day of session, where the judge said that Brad Tapke was able to take that seat. But I'll pause on that one because that one comes back up. But the one that was really kind of threw a wrench in a lot of the Hortman-Damuth plans was Roseville. The legislator, the DFLer that won the Roseville seat, there was a lot of evidence that the Republicans had pulled together that he did not actually live in the district that he was running in and that he won in. So they filed the lawsuit in November, and in December it was the first weekend in December that they had the hearing, and the judge listened to all of the evidence on that this person that had won that seat did not actually live in the district. And he ended up making a decision that the DFLer was ineligible to take that seat. He did not live in the district, so therefore they would have to have a special election. At that time, that then put the 67-67 into a 67-66. Governor Walz quickly called that special election for January 28th. The Republicans ended up filing a lawsuit claiming that there was a premature calling of the special election because the seat was not vacant, because Jamie Becker Finn who was the former legislator who did not run, was still in that seat until the beginning of session. So that went to the Supreme Court. The Supreme Court decided with the Republicans that the governor did not follow the correct order of declaring that special election. So they canceled the special election in January 28th. That threw a lot of stuff into disarray because the Republicans were like, now we have the majority. We have the majority with a 67-66, and so we don't need to do the power sharing. And so we watched for a good couple of weeks what was going to happen. And it's interesting kind of now that we are at the end of February to really look back because in legislature time, everything moves really, really quickly. So back, if you look at the beginning of session, Democrats did not show up. They had a swearing in 2 days before session. They didn't show up. The Republicans kind of took over, declared themselves in the majority, put Speaker Demuth in, and the Democrats then filed a lawsuit saying that the Republicans couldn't do that because there wasn't a majority of 68. And the Supreme Court ended up siding with the Democrats on that side of things. But the Democrats still didn't show up. They did not show up for session until February 6th. That's when Speaker Demuth and Speaker Hortman came to a power sharing agreement. And what it ended up looking like was that Speaker Demuth, so Lisa Demuth, will be the Speaker of the House for the next 2 years. Melissa Hortman will be, I think, Speaker Emeritus, DFL leader. They will have a lot of checks and balances on Lisa Demuth because, so what ended up happening was now the governor has also called a special election for that Roseville seat. So it was obviously wiped clear on January 28th, and now it will be held on March 11th. So we're looking at having a full strength legislature on St. Patrick's Day. So we're still kind of a couple of weeks away from being back to 67-67. It being a Roseville, it should be a Democratic seat. Things can change in special elections. It all depends on who decides to get out to vote because it will be a very minimal amount of people. But for the time being, we're at 67-66. With Speaker Demuth being in that chair, she will be the speaker. Right now, where we are at, the Republicans hold all of the gavels in the House. So they have complete control over what's being heard in those committees. They are able to actually push things out of committee because they do have a slight majority at this point. However, you still can't pass a bill off the House floor without 68 votes. They are using this time to look at a lot of the bills that passed in the last couple of years. They've been bringing some bills to the floor, but they are obviously not passing. So we are seeing things on paid family medical leave that the Republicans would like to have fixed, but knowing that there really aren't going to be any changes. So right now we're kind of in that Republicans are kind of trying to do a lot of what they couldn't do the last 2 years with complete Democrat control, and have some of the hearings that they really want to have, and have some of the votes before they do go back to a 67-67 tie. So that's kind of where things are at. But then if you look at the Senate, the Senate's really looking at, what's happening with the Trump administration and kind of trying to put some of that stuff on their radar and kind of look at what's happening with the trickle down to the state. So where are we at right now? So right now we are at 100 Republicans in the House or in the legislature and 100 Democrats. So we are very, very even. The Senate, we have some blue dog Democrats that are trying to kind of pull this more moderate sway this year, but that has not come across as more moderate yet. The one goal of this legislative session, they only have to really pass like one decent sized bill, and that is the budget. The goal of this session really needs to be the budget. The budget must be done by June 30th. The legislature ends on May 19th. How they're going to get an agreement remains to be seen. We are looking at March 6th next week when we will get the February forecast. When we get the February forecast, those will be the numbers that the legislature will be working off of. The governor did come out with his budget proposal based off of November's numbers, but he will have to revamp that off of the March 6th numbers. But we are starting to see kind of where he as putting his priorities this year. One of the things that he's really been touting that came out of his budget proposal was decreasing the sales tax. And his goal was to decrease the sales tax by 0.075%, which is $7 for every $100. And his commissioner of revenue, Mark Quartz, stated that that could probably save the average Minnesotan about $37 a year. What he ends up wanting to do, decreasing the sales tax, saying it's never been decreased, but then they wanted to expand the base. They wanted to expand the base, as they call it, a wealth, to get at the wealthy. And that then looked at professional services. And in those professional services that they were looking at, they're looking at expanding it to accounting services, legal services, and banking service fees. Not business to business, but this would be all on your customers. We have not gotten language. We know that it would not, they've already said that it won't be attached to overdrafts and late fees, but we don't quite know what it will. We assume it will be anything and everything. And account maintenance fees is on the top of their list of the things that they have included on their list. We've gotten a infographic, a very fancy piece of paper, but no specific language. Tess came off of mute, so do you want to say anything?
So it's 7 cents of every $100 would be the increase. So what we saw in testimony from the revenue commissioner was that, there's a lot of areas where they could tax service fees, but they chose areas like banking and legal because their argument was that the employees of these industries make more money than employees of other industries, such as, let's say, a car mechanic. So they think that there's more room for those businesses to, I assume, then pay their employees less. They said there was more wiggle room to be able to afford this. So anyway, the people who pay for those services, I guess, can afford that, or that the business is supposed to eat that. I don't know. It didn't make a lot of sense, but that was the argument that, they're trying not to be regressive. They're trying not to tax people of low income, but when you tax account fees and loan fees, it is most loan fees. They've exempted origination fees, so that's the big one, right? But so any loan fees would be subject to this tax. Safe deposit is specifically mentioned. So we've just tried to express the difficulty that banks are not set up to do this right now, and that their cores would have to be modified to be able to do this, and that it would take a significant amount of time to be able to come up with that. So we haven't testified or anything yet. There was just one hearing. But we will be speaking about it. I mean, the Republicans, Teresa, have said this is a no-go, right?
The Republicans have said this is a no-go. And, and to many of the people that came to Bank Day at the Capitol on February 11th, I know a lot of you were talking to your legislators, and especially those blue dog Democrats in the Senate. We've kind of really pinpointed them, and a lot of even of the senators don't think that this will end up going on. And a couple of the Democrat House members as well don't think that this is going to be something that ends up in the final bill. But I think you take it seriously because they put it out there. But again, the fact that we have not seen language, and they do have like credit card fees, and the co-chair of the House Commerce Committee is Representative Herr, and her comment, in that tax hearing, because Commissioner Marquardt made the comment, like, I've looked at my bank statements, like, this isn't going to hit me, like, I'm not gonna feel the sales tax. And Representative Herr made the comment as to, well, there's different ways of how account maintenance is, fees work, and you may be getting at some of the people that you were not intended to get at. And then the other comment that was made in that same hearing was on check cashing fees. And so the question is how wide sweeping will this be? And again, it's just, there's going to be a shortfall in the next biennium. And so the question is, where do you make up the money? And their comments are, well, we'll just, again, go after the wealthy. But I don't think they're, whether they want to understand it or not, they just believe that when you say banking, it obviously means there's money there. So, moving on from that one, the Minnesota Senate last week, the Senate Commerce Committee had a hearing on the CFPB and the implications of what's happening in DC. So we sat in that hearing and we listened to the Department of Commerce spoke up, and then also the Attorney General. So Keith Ellison spoke at that hearing. The Department of Commerce really just kind of gave their overview as to, the impacts of the CFPB on, on their departments and their enforcement. They just, they always said that we could always use more money to do a lot of the stuff that we're doing. But they really kind of stressed, who they regulate and what they do. But the bigger and the more egregious testifying was of Keith Ellison and his comments as he sat on House Financial Services when he was in Congress, and his emotional tie to the CFPB and how amazing it is, and flat out saying that without the CFPB, the large banks, there will be no oversight of the large banks. He then also proceeded to say that, state chartered banks and credit unions were, their regulators were the Federal Reserve. So there was a lot of comments that were made at that hearing that were inaccurate. And I think it was one of those, you're going after the administration, and our comments afterwards and follow up with a letter to the committee members and also to the AG, were that you're kind of making everybody, you're putting this fear tactic out there that without the CFPB, that there's going to be no regulation. And so that was
And bank failures too. The
Yeah.
bank failures would possibly flow from the CFPB not working.
Yeah, and so it was really frustrating to listen to the Attorney General kind of put this fear out there that that this, department was this be all end all, and that without them, banks weren't going to follow the laws or follow their rules or their regulations, and yes, that there would be, failures and everything else. So the question at that hearing was going to be, is there more that needs to be done at the state level? And we'll watch for bills if anything comes up from that. Tess, do you want to say anything more about that hearing?
Just that we followed up, like Teresa said, and just clarified how banks are regulated, just so that they understand. And also, there's going to be something in place if that Congress is the one who could get rid of the CFPB only Congress. And so if that were to happen, those duties would shift to another agency. So there really isn't any need to feel like the sky is falling right now.
Yeah. And then other things that we're looking at this year, fraud's a huge thing at the Capitol, a lot of government fraud. One of the committees that the Republicans did put into place and they will control for the next 2 years as a fraud oversight committee, chaired by Representative Robbins. The Republicans will have a 2-seat majority regardless at that one. And so they're doing a lot of hearings right now on government fraud, but that kind of trickles down to fraud in general. One thing that we did see in January, at the beginning of January, when Governor Walz put out an executive order moving all fraud departments under the BSA or BCA. I can get my acronyms correct today. But that moved the Commerce Fraud Bureau from Commerce over to BCA, and there's been a couple of hearings on what the implications of that, because that department in Commerce is really, really focused on insurance fraud and some financial fraud, and it's been funded by the insurance, the insurance industry. And so just kind of watching how the different maybe in the BCA they'll have more resources, and I think that's definitely beneficial. But I know that there were some concerns was when you're putting everything under one one department, will resources get pulled to the other areas? Will you go to kind of a more attractive area and some of the other, financial fraud cases not get as much time and money? And so they're looking at, is there going to be legislation that's needed to make sure that there are safeguards in place? Again, because you move something, and legislators were definitely frustrated with an executive order versus going through the legislature on this one.
Yeah, and just one more thing, the Commerce Fraud Bureau moved to the BCA, but the senior fraud part, that group is still there. So a lot of you know Marty Fleischaker, he just retired actually. And we heard from the Commerce Department yesterday that they expect to have someone to replace him in March. But that unit that he headed is still housed within the Commerce Department. So when you have those senior fraud issues, they'll still be there to help with that.
Yeah. Tess, do you want to talk about commerce bills that the policy bill that we're expecting?
Yeah, two quick things that were included in the Commerce's bill. So sometimes we have a fix for something and they agree to carry it in their bill, and that really works well for us, as you can imagine. One was a provision that will allow banks to close accounts for people immediately when they are harassing their employees or being disruptive in a branch. We had heard from our board members and other bankers that this was an issue and that the state statute requiring a bank to wait 30 days before closing an account was not good in some situations. They needed to be able to tell that person, you can't come back. And so there's a provision that will do that. So we're excited about that one. And then there's just a fix. Safe deposit, we feel like kind of got swept up into this auto renew statute for like auto renewals of gym memberships and things like that. And so we wanted to just get that topic out of this general auto renew statute and put it back into our safe deposit statute. So we did that. And then there's one more thing. It's not part of the commerce bill, but it would have been if we had it early enough. But last year they passed something in 47.20, which is a mortgage statute that most banks don't use for originating loans. You could. And the Commerce updated that it used to apply to loans of 100,000 or less. And so no one was using it for mortgages, but now it applies to like 766,000 or less, the FHFA limit. And so that swept a lot of loans back into this statute. And at the time, in discussions with Commerce, they didn't think it would impact any loans unless they were made under that statute. That's what we were told, but that turned out probably not to be true. And there are requirements in there saying your mortgage has to have these things in it. And the Fannie Mae mortgage has almost all of it in it, but I'm concerned about loans that are in-house, that maybe you used your own form or something like that. And so we have drafted language. Teresa's getting it all taken care of, but so that would make that new provision in the law from last session. The compliance is optional until this summer, and that will give you time to make sure that your in-house mortgage has the language that you need in it. So we're hopeful that we can get that passed, even if, it should be a bipartisan issue, hopefully.
So other than that, there's other things that we are working on. We're meeting with with the legislators, the new ones every day, kind of getting their stories of banking and educating them. But make sure you're subscribed to the Political Insight that comes out every Friday. That's where all of the up-to-date information, what we're hearing, what we're seeing, the millions of bills that are getting introduced. There's a backup in the revisor's office. Everybody's got ideas. And then one other thing that I'm just going to put out there that we continue to watch is watching some of the Republicans push for adding political affiliation into discrimination. And I will hand this one over to Tess a little bit, and then she can hand it over to Tom. But that's one of the things that we've started to see more is that whether they're in specific banking statutes or in the discrimination human rights statute is that you can't discriminate based off of political affiliation. So with that one, I'll hand it over to you, and then you can hand it over to Tom.
So we saw a bill that was specific to debanking people based on their social credit score or political affiliation. We saw that last year too, and we don't really think that one's going anywhere. There was another bill that would add political affiliation to the Human Rights Act. And that has banking provisions to it. And so it would say, well, you can't discriminate against a customer based on political affiliation. And no, I don't think banks would do that We can only think of one instance, but it would allow someone to sue for that, whether that actually happened or not, which is the real problem, right? And so I think that we're okay on that one. Right now, I don't think it's moving. One other update, Teresa and I are on the Department of Commerce's Bank Advisory Council, and we had a meeting yesterday, and one of the things, well, there are several things they mentioned that I wrote down, but one of them was that counterfeit passports are a problem. I know many of you already know that, but that's something to look out for. They talked about the Office of Cannabis Management and when those licenses will be ready. So the application window is through March 14th. And then our OCM has 90 days to approve or deny those, and the lottery will be in May and June, but only certain of the license types go into the lottery, so some will and some won't. They also mentioned that the Department of Revenue is concerned about getting tax payments in cash from these businesses, and they really don't want that to happen, but Commerce has told them that they best be prepared for that. Yeah, and finally, just an update on our lawsuit against the FDIC. We have oral arguments scheduled for March 20th. We'll see what happens there. I think that with the Trump administration coming in, some of the lawsuits against the CFPB in particular, they've been instructed just to put a pause on these cases. So I imagine that that will just be delayed at this point. Okay, that's all I have. Let me turn it over to Tom. He'll give some more information about things that are happening with the Trump administration and the regulatory agencies.
There we go. If I can turn my camera on. Yes, all sorts of changes happening, but not as much as you may think if you're listening to the news. We've got some things just talking about the federal agencies. We've got a new acting director for CFPB, a new acting chairman for the FDIC, and then the new acting comptroller for the OCC. But the Federal Reserve Board and the FinCEN have the same leadership that they've had. And so there's been a few changes that the agencies with new heads have enacted. The big one with the CFPB, just halting all work for the time being. And as thing mentioned earlier, Congress is the entity that would be able to close up shop on the CFPB. So it's not likely to happen at this point. I think that obviously the Trump administration. Yeah.
I was just going to say there's a lawsuit right now, and the Trump administration filed something in there. The lawsuit says that they are not intending to get rid of the CFPB. Their intention is to streamline it. And that makes sense with the man they picked to head that agency. He's known to be a bipartisan, serious appointment. So it's not the type of appointment you might do if you were just going to try to get rid of an agency immediately.
Yeah. Yeah, and certainly the Trump administration can replace the head of the CFPB, which they're going to do. So the CFPB can control their own rulemaking. They can pull back rulemakings that they've made, reconsider, those that they've made in the past, even ones that are final. So they have control over that process now. And as far as the FDIC, Travis Hill, the new acting chairman, has come up with some statements to kind of try to get the FDIC a little more in line in the Trump administration's priorities. Having the FDIC more open-minded with fintech partnerships, digital assets, all that good stuff, streamlining bank mergers, those kind of things, as well as just taking a wholesale review of the supervisory and rulemaking process to make sure that the FDIC is staying within its statutory mandates and not going outside what they think it should be. Kind of things like the most of the banking agencies have announced pullout of international climate initiatives. That's kind of one example of that kind of thing that they say is not truly within the banking agency's mandate to address. Another piece that may see some changes, the Congressional Review Act. At this point, the only one that's banking related that's actually been introduced is the one on the CFPB's overdraft rule for large financial institutions. So if that happens, they have to act on it by sometime in May, or get it passed by sometime in May. So if that were to pass in Congress, then that would avoid that rule, but then also it prevents the CFPB from doing a similar rule in the future. And the other one that I've heard mention of that possibly could get a CRA joint resolution is the prohibition on creditors and consumer reporting agencies in relation to medical information. So that's a possibility to come down the pike later. But again, they have a tight time frame to do anything on that. So there's not like to be in there.
But they do only need 50 votes for that, so
Yes, it's a majority. to get
so it's
through.
doable.
Yep, it's doable if they got, depending on what other CRA topics they have, outside the banking realm. But kind of the big takeaway, I mean, there's been a lot of, of presidential statements and directives and all that, but for banks, as far as your kind of day-to-day business, nothing has really changed. You still do go about your business the way you would. Obviously, it's important to monitor there is a direct change, but until there's, one of the agencies come out with a definitive change on a particular topic, whatever you're doing currently should be what you continue to do. And there's also, if some other pieces, if the banking agencies decide to kind of pull back enforcement on things, it could open the door for, say, state AGs to be more active in enforcing federal laws that they're able to also enforce. They typically would have, if it's a kind of consumer compliance one that's controlled by the CFPB, they'd have to notify the CFPB of that. But then the only way they'd enforce would be through actually filing suit. So they don't have, kind of that supervisory investigatory capability. They would have to be actually filing suit. So. But that was kind of the big things. I mean, hopefully the takeaway is just to kind of keep the status quo is still there, in large respect, as things may change in the future, and some things may go away. Something as big as like 1071, that's something where they could, pull back and reconsider and maybe stick with just the items that are laid out in the Dodd-Frank Act and not have the expanded items, which would be good.
Yeah, so they could do
many
that.
banks.
The agency could do that, but
Right.
also there is a bill in Congress to repeal the entire thing as well.
Yeah.
So that is a possibility, actually.
Yes, yeah. So there's all sorts of possibilities, but at this point,
Yeah.
nothing definite. So we're still having the status quo. And I did see there was one
Yeah, there's
through
a question about the closing accounts under that Minnesota statute 4777. Somebody asked if you're closing it immediately, does that create a problem with Social Security payments or things like that?
Yeah, there are some special protections on the Social Security Administration. So if you have deposits going in for Social Security, there are protections for that kind of thing. So that's outside of the state statute, obviously, but that's part of agreeing to have accept Social Security payments, which everybody does.
So I guess it's not going to work as well on some
Yeah,
accounts.
yeah. If you have some of those, but you have the same. Not gonna change that.
Yeah.
So.
Also, when I was talking about that mortgage changes where we drafted some language to kind of give you some time to comply with it, I should have mentioned that national banks are exempt from that. So they've always been exempt from this statute, and so are credit unions unfairly.
Yeah.
But just want to mention, if you work for a national bank, that's not an issue for you.
Yeah, so that's good. Yeah, and as I think you mentioned too, the Fannie Mae covered most of the requirements in their mortgage language already. It was just certified mail was not specifically mentioned. So
yeah, the statute required all the notices to go by certified mail, so I changed that to first class mail. I don't think people order or open certified mail anyway. That's my theory. It's usually bad news, right?
Yes. The banks will open it because they'll get their
Yes, that's true.
garnishments and levies through certified mail. But yeah, the normal person probably sees something green on their envelope and throws it away.
Yeah. Speaking of garnishments and levies, the legislature, made some changes last year, but not really to bank garnishments and levies. But there was also a directive in what passed last year that those forms be changed into more of a plain language style. So I've been sitting on a task force where some plain language experts have been changing that language. So expect to see new forms after this all has to get approved by the legislature. I believe all the changes, but it shouldn't really impact you at all. It'll just hopefully make it more clear to debtors what their rights are and what's going to happen.
Yeah,
So
it's really
look for
good.
that.
It's really good questions from bankers about what amount goes where, you know.
Yeah, I don't know that they've improved that so much,
Yeah. May not be their focus,
but the words will be smaller. There will be less syllables, and
yeah.
apparently that's very helpful to consumers. So we expect that to happen. I don't think we have any more questions. So unless you have something else, Tom, I think we're all done.
No, yeah, I think the takeaway is hopefully I emphasize that enough. Just, the status quo is really stay the same, until the agencies make something that's, explicit.
Yeah, and we have heard from bankers who have customers that are very concerned that their FDIC insurance will go away, things like that. I mean, there's really no reason to believe that, but I think maybe some people have been saying some things that aren't true out there, but
Yeah.
there are talking points if you're interested in that. If that occurs and you want some talking points, reach out to us at legal@minbankers.com. Tom and I answer those questions, so we'd be happy to help if you run across that problem.
Yeah.
Or with anything else, let us know. And if you have any topics you'd like us to cover on the next Minnesota Matters, please let us know. That would be great. All right, I think we're all set. So thank you so much for joining us and have a great day. Bye.